What is going on? Happy Wednesday, August 30th. Here we are looking at the S&P, which is actually pretty, it's kind of choppy today, even though it's up about 0.5%. Yet the grind kind of continues back to the north as we speak. Let's take a look at the 1 hour chart here the past couple of days. Yeah, really just kind of broke out of this consolidation zone and then popped up above this 444. That was a spot we had been targeting or we've been watching. If you go to the daily charts, why? It was a prior area of resistance back here before a pretty big move, and then also an area that we came up to and then fell off pretty substantially, literally just about a week ago. So that's the deal right now on SPY. It's kind of a chill day. I don't think it's anything crazy. It's almost the end of August. This is the next spot I'd be looking for in terms of targets. This gap fill right here, which takes you to like 450, 350 up to 455, 50. So 455, 50 would be kind of like the next area to look for. You also don't really have a ton of volume resist. You have a little bit of a volume gap up in here, a little something right in there to fill through. So that could be an area to watch. We'll see. I'm going to jump over and just see if I can edit my volume profile indicator here and see if I can make this a little bit cleaner to look at. If you were to make that, do anything? Let's go to 75. No, not a little bit. Now there you go. Moving on. Either way, you got a little bit of something to move up into, and then as we go up towards that 455 area, more stronger volume to watch. But I hope you guys are doing good. Hope everyone is having a nice day. If you're watching this after the fact, a thumbs up would be awesome on the streams, on the videos. But if you're here hanging out, we're going to hang out for the next 45 minutes until the market closes, and that'll be the day. This is the end of it. This is the end of my August. Trading wise, I'll be leaving tomorrow, and then I'll be back next week on Monday. So I'll be back before the market opens up on Tuesday, which is kind of cool, I guess. But either way, there's a couple of things that are kind of concerning to me. There's some good and bad to this. So I want to pull up the Robinhood portfolio quick because it has gone on a tear. It really was just yesterday. So I have not added any money to this portfolio. I actually next year I plan to start adding a little bit more. Not a little more. I plan to start adding a little bit to it, and then hopefully shortly after that, I will plan to start adding a lot more once I take care of some loans that are paid off, which the goal is to have them paid off or get them in a much better spot in the next 2 years. And then so we'll see. Of course, either way, it doesn't really matter. I haven't touched it really. So I'm in some stuff. I am in on some margin. I have some credit spreads, which means it sucks up some of my buying power and whatever. But either way, it's done well. Yesterday was a day that was kind of funny because here's the portfolio, right? The portfolio allocations are as follows. You have essentially Dow stocks, so Dow dividend stocks. You have, now I have ARK, so I recently added ARK, so I have growth. So you've got Dow exposure, you've got growth, and of course there's dividends in there, growth exposure. You have exposure to bonds, so essentially if rates go down and bonds go up, right? Bonds. And then I also have a little bit of Bitcoin, and then I have a little bit of silver. And every single one of those things was up yesterday. Every single one. So kind of everything was kind of somehow working in our favor. So if I go back over the past week, the portfolio is up 5.5%. But yesterday alone, the thing started the day at 10.6, and now it's at 11.2, almost 11.3 right now. So kind of crazy, but the game plan is obviously to keep it. But I think I've done a much better. I think it just shows I've done a much better job of managing through the pullbacks, and then also locking gains, and then allocating it to either safer stuff or a different sector of the market that maybe hasn't done as well or that isn't as prone to downside risk. And so, yeah, does it kind of cap your upside? Yes, because had I only been exposed to tech and growth yesterday, yeah, you could have had a much bigger day, but then you could be, the days prior to that or the weeks prior, you're more volatile. You're more just going to do what tech and growth does. So it's diversified to a degree, but not Not even to a degree. Like, it's pretty diversified, I think. And then my plan is I'm not really interested in getting a hedge. I mean, if you even want to say you need to have a hedge, I don't really think I need to right now because of just the nature of what I'm in. If the market starts to push up hard and we start seeing this get back up into greed, extreme greed, then, you know, the more we push up, the more interested I am in a hedge. That's kind of how I view it. So that's the deal. I'm also not in like short-term expirations. These are just shares. So it's, you know, if I got to hold it for 6-10 years, it doesn't matter, you know what I mean? And I'm intending not to sell this stuff. So we'll see. That's where the portfolio is at though right now. And yeah, we'll keep on going. The thing that I was going to say is that it's kind of concerning because I do have this ARK call. I sold this yesterday. Yeah, I sold this yesterday as ARK was at, let me pull up ARK's chart. Not a bad thing, but I sold it yesterday when ARK was kind of perking up and it was up like around $42 or so. And I'm like, okay, it's a green day for ARK, a good day to sell a covered call. So I went out to the end of this week and sold the 44 covered call, which was still about 5.5% higher from where it would have been, or from where it was at that 42, I believe. Let's see. No, maybe it's oh no, yeah, it is. It's about 5% away. So ARK would need to go from Tuesday to Friday, after already being up like, you know, 1.5% on the week. It would have to go another 5% to then be to threaten taking me out. And it looks like it can totally do it. It's 50 cents shy. You know, so it could easily get there. Now, of course, tomorrow and Friday, who knows what happens, but it can totally get there. And will I leave it and let it take me out? Probably. Unless maybe come Friday I could roll it. We'll see. But if I get taken out on ARK and it just blows through it, what I would then do is look to sell puts, you know, underneath the 44 strike in the future. And if I get back in, I get back in. If I don't, I don't. You know, then it served its. It didn't serve a great purpose, but I got it at. What's my average? My average is like, I want to say it's like just under 41. It's 40.70. So 40.70 to 44 in like literally 2 weeks would be plus covered calls. So let's go to like 40.70 to 44. It would be about 8% plus covered calls, probably closer to 9%. 8.5%, 9% in 2 weeks. I mean, it's pretty good. It's a pretty big move. So, you know, I would take it and then look to re-enter in if I could lower if we get pullbacks, but there's no guarantees that's going to happen. In a perfect world, we pull back tomorrow and Friday, I stay in it, and then it goes higher in the coming months anyway. But you never know. That's what selling covered calls is all about. So I don't picture that though, to be honest, as like, you can, from an investing standpoint, you could be like, oh my God, this is like the stupidest way to invest because you're never going to hold long-term. But in that situation, for something like ARK, like, yeah, I would like to have exposure to it, but the higher it goes, the less I want exposure. So if it goes up a ton while I'm holding it, I'm not mad about trimming it off. Like, I don't really care. Oh yeah, tomorrow's PCE. So we've had 2 nice days going into PCE. So we'll see what happens at PCE. That would be, you know, it's gonna be a market mover, you know, and it could be a day where, to be honest, like, who knows? But if PCE comes in high or low, or the market doesn't like the PCE number, just say that, because who cares about high or low? But if PCE comes in, whatever, the market doesn't like it, I mean, it's going to be a reaction to the downside, you would think. If it does like it, it's going to be a massive move up, continuation move up. We'll see. Cannabis stocks right today. I was seeing a little bit of that. Yeah, look at that. Off those lows, look at that on MSOS, the US cannabis ETF. 475 to 6. That's a massive move. 35% spike. Look where it went though too. It's funny. Look where it spiked up to. Like literally like to the same high that we had like right here. So you got to break over that 650 area on MSOS. Let's see. I got out of my target call credit spread for like a good gain. It had just made a big move down, and I was like, you know what, the market's bouncing here. I don't really need this to come back up against me in the next 2 weeks. So I locked in, like, I think I sold them at 80 something cents, and I bought them back at like 25, 26 cents. So I made whatever that is. Percentage wise, however you want to calculate that percentage on those. I just got out of those just to be good, just to be feeling good. The Generac, it's funny how today today it's not funny because, the massive hurricane, but Generac was this thing we were looking at, before this hurricane was even a thing, weeks ago. Not that many weeks ago, like 2 weeks ago, back when it was around 110, like somewhere in here, I believe. And we're like, just had earnings, big move down, try to put a higher low in here, double bottom at around 104.50, technically on the bigger time frames, it would be, a higher low. And we're like, this could be good, especially for hurricane season as a good, way to play hurricane season without having to go into small caps and mess with those things. So I ended up selling some puts, put credit spread, and 105 by 110 strikes. So as long as it's above 110 by the end of next month, I'm good. And it's grinding up. So you're gonna appreciate those are gonna go to zero. They're not gonna accelerate there. And if I bought the September 15th, then they'd be pretty close to zero because there's only 2 weeks left. But as you get closer to the expiration, let time decay do its thing. When you're way out the money, those contracts are gonna decay fast. So as long as we don't just come right back down towards that, sub 110, these are fine. And it looks pretty strong. Today was kind of a day where it's a perfect example of like when you have a hurricane, you do not want to be looking at hurricane stocks, the day of the hurricane. You don't. The volume and the move, look at the volume down here. It was already increasing, right, the past couple of days or the past 2 days. So the move actually occurs going from Friday into Monday. Now, part of that is because this hurricane threat became very, very real by Monday morning. So you had that already happen. And then a big push as it was strengthening yesterday, or projected to be now a Cat 3, Cat 4 upon landfall, whatever it was. I think it was a Cat 3 at landfall. You get the big push there. Then today it makes landfall, and then market opens, and you have this massive move down. Let's go to the 15-minute chart. And you have this massive move down. So if you woke up today and you're like, I'm going to buy Generac today and I'm going to nail this, you got absolutely washed because what happened, right? You have a sell the news. So buy the rumor, sell the news. Not that it necessarily is a fake event. It's a real event, but you can't play, like I've just learned from these over the years, you cannot play that type of setup or that type of trade the day of the event, or even you want to be in way ahead of time. So the idea of saying, if you want to buy Generac or you want to play it to the long side, however you may see fit, credit spreads, this, that, the other thing, whatever, debit spreads, or even just straight up calls or straight up shares would have been probably fine. Your time to do that was in the past 2 weeks, not necessarily this week. And if it wants to go up to do this, great. But now you're already in, you're locking gains, and your stop losses move it up, and you can just chill. Versus now, people are potentially chasing, or it's now becoming, this is a good play for the rest of the season for hurricanes, and it's like, okay, well, it's late. Bear, peace out. Check out on Tuesday. Yeah, we'll be back. I'll be back on Tuesday of next week. That's the plan. Tesla jump yesterday, 6%. Because the thing with that is because that's the problem about these option income strategy ETFs. You're capped when you don't want massive volatility in them. Like realistically, I mean, you do and you don't. The dividend that will help the dividend cause because the options that they can sell are now a higher, juicier in terms of their premiums. But the problem is that if, for example, they're running this thing and they're selling, some 150 calls on Tesla, well, guess what? They're only going to be able to make X percent. But once Tesla goes above 250, once Tesla pops over 250, doesn't really matter because now they're capped. Their gain's capped. So that's the problem. And that's the one, that's not the one thing. That's the thing, in my opinion. That is why I don't love them. They're good for if you didn't have the funds to buy 100 shares or you didn't want that excessive exposure to just one stock. So for example, for Tesla, that's like $25K. So to buy 100 shares of Tesla, you need to have $25,000. If you don't have $25,000, or you might have $50,000 and you don't want to get half your portfolio exposed to Tesla, then you have to kind of go about it the other ways, where you can go with the income ETFs and whatnot to get the exposure. It kind of will average out a bit better after the dividends get paid every month, so it's not like the end of the world, but that plays a role. You don't want massive up days. And the thing that sucks is that you're there for the down days. So like if we do the math on this, right? So from peak to trough here on TSLY, you drop 28% from July 19th to August 8th in a month, 1 month. Tesla, so 28% there. Tesla dropped about 29, so about the same amount. So honestly, about the same amount. So you're there for the entire downside. But now, right, so essentially, so cool or not cool. And then Tesla has now bounced off the lows, from lows to highs, today's high, about 22.5%. So it just shows you, right, you're there for the entire downside. And then here, TSLY, from low to high, because it's an aggressive bounce in a very short period of time, we have only bounced back about 11%. Now, add in the dividend, and then that will add up to like, okay, well, it's not the end of the world. Sure. But you see how it's like not the perfect way to play it. But it's the same thing if you had the 100 shares, maybe you had 100 shares of Tesla and you're trying to cash flow it and whatever, and you're selling calls. They're selling calls this whole way down, to the upside above your strikes are well above the stock price. And then, sorry, this is TSLY. I'll go to Tesla's chart. You're selling calls, whatever, selling covered calls this way down, right? And then all of a sudden, Tesla has this massive move. It catches you off guard, kind of like I did like yesterday. Same thing, you could have been selling covered calls. Tesla has this massive move. It's like, holy shit. And it snaps up massively. And now you're sitting there like, whoa, whoa, whoa. And you might have sold a 250 covered call for this week. And now it's at 256. And it maybe if the market goes higher the next 2 days, it could be over 260. And now you missed out on $10 of gain or more because you essentially capped your reward at 250. Now you can roll them and stuff, but the way that in a perfect world, the more that I think about this and the more that I'm like, it's kind of what I did with ARK. Like, it's my situation with ARK. You really don't want to do it unless the stock is up. Like, it doesn't make sense. If it's a longer term hold idea, you don't want to sell. Jeez, my music's coming on. You don't want to be selling covered calls, when the stock is going down, because you're not going to get paid enough. And if you get a snapback rally, you can get taken right out. That's the thing. So you want to be selling after it's had a couple of days of good. That's kind of the way you want to do it. Or after you kind of judge, right, it's overbought. You're going to get some good premiums. And now you're essentially not saving your backside, but you're kind of protecting a little bit of your backside by selling some covered calls to the upside. And if the stock falls back, okay, well, those are going to be all profit in my hands. That's like a dividend. You get paid a dividend in case the stock falls down after a big move up. But again, it's the same thing. It's kind of like, you're playing that like, you're guessing game of like, how much can it go? You don't know. There's no way to know. So you're honestly, for most people, you're probably better off by just simply buying and holding something. Which is why, with how volatile Bitcoin is, like I have BITO as my Bitcoin like exposure. With how volatile Bitcoin is, I actually was there for this rally right here, and I had sold a covered call. Like, I forget, it was like somewhere in here I sold. So I didn't sell it at the top, but I sold it and my strike price was like 17. And it just so happened that Friday we closed right under 17. So I stayed in. But like, that was a perfect scenario of how it worked. But that's exactly why I will not sell a covered call now on Bitcoin, like on BITO. Like, no, I won't do it. But we get a move like this, and BITO is pushing up towards these highs. Yeah, I'll sell a covered call up towards 19 or 20 bucks. Like, totally. It'll be worth something. I'll get paid something. And, I'm selling it when we're ripping versus right now, and then having all of a sudden it go like this. I sell a covered call at 15 or 16, and now next thing you know we're at 18, and I miss out on $2 of gain, which is a big percentage on a stock that's cheap. So that's the thing you got to be careful of. So it's good. Covered calls are good and bad. They're good and bad. I love them personally, but you kind of have to factor in things like this too. Sentiment. Tomorrow we're going to get sentiment data as well. So, if sentiment gets excessively good, that's when you want to be selling covered calls. That's when you want to be looking to even trim out of stuff that you don't want to hold anymore, or that you've got overexposed to and whatever. Sentiment gets really bad, and that's the time to be selling puts or just buying shares and adding in and getting ready for the next, bounce, whenever that may be, or rally, whenever that may be. It might not be for a while, but you can ride it out with enough time. I mean, generally speaking, market's history has told you that you're going to be okay. That's funny. Send that to my buddy. We have a trip coming up tomorrow. We're flying American. It's gonna be hilarious. It's funny how that goes, American Airlines flight attendants vote to authorize a strike right now. Because why not? What's today's date? Today's the 30th. Wait on bigger volatility on PLTR, so cover call again. Yeah, that's what I mean. That's because when you have a stock at that's it's starting to push up now. But again, as it pushes up, right, the more it goes, like the better you're gonna get, or the better risk reward on those covered calls you're gonna be. Because the way you get screwed on covered calls is you end up selling one too early or too low, and the thing goes way higher. That's how you get screwed. But again, if you're fine or you're happy with that gain, as you can use it as like a limit order or a limit sell, then it's not the end of the world, in my opinion. I was looking at a firm. Oh, ho, ho, ho. It's just really volatile. I personally don't. I mean, the idea is good. I don't think I would trade that, but that's breaking out right now almost. The reason why, I mean, you can look at it on a bigger time scale. If you look at it on a bigger time scale, it's not a bad play, I don't think. Honestly, shares here could be interesting on a firm. It's a pretty good, it moves. A firm moves. So I think it is. That's the play. You would buy shares instead of options. You could kill it on options if you get the move right, but I think shares could do very, very well as well. Look at like a move like Upstart. Upstart had a monstrous move from the lows, 12 to freaking 70. A firm, on the breakout here near 20, maybe you can give it a 30, maybe even more if it gets really going, but that looks good. So I would say the target will be here. Maybe I would even look at this one in my Roth account to play for a swing. But you would do this. But if let's say that you're getting the breakout right now, so I guess you would technically play that. This thing is so wonky. Okay, cool. So you come in. Let's see. We go buy the break right here. Stop loss under these higher lows. That's 31 risk. So that's a 31. That's a big, it's a big downside risk. So you have to play it according with size. But if you go for a standard, or not standard, if you go for like a 2-to-1 risk reward, you're looking for the low 30s. I don't think that that's impossible. You really don't have a ton of volume up here. You got a little guy right there at like 22, 23. Next big target resistance is up in the 40s. So that would be the idea, I guess. But that chart looks pretty good. Maybe I'll look at it next week. Come in, check on it after PCE and all that crap comes through. Gotta adjust this volume profile indicator. I don't know. I gotta just being weird. Ticks per row. Let's do ticks per row. Make it look a little bit better. Now let's see. That's on the weekly. Let's go to the daily. Does it look really bad on the daily? No, that's fine. Ticks per row is fine. Let's just look at SPY and see a couple things. Just adjusting that indicator just to see how it looks. Yeah, that's good. I think that's fine. SPY, let's go to the weekly. Yeah, that's good. Yeah, that's kind of how I like it. I like nice and defined. I don't like the huge. I don't like the huge, massive blocks. But when you go to like penny stocks, I don't know. It's not a penny stock, but that's weird. I wonder why it does that. All right, let's check in the SPY here. Boring into the close. Bar puts. What do we got on Mara? Nice grind back today here on Mara. But I mean, this is a spot that you would think like this is a spot that we had. Well, let's turn this over here. I mean, you're up 2 days. How much do you want to bet that this continues? Right, you're coming back to a spot. Same on Bitcoin. Bitcoin's, I guess, a better way to look at it too. You're right back up close. You got close yesterday to essentially the breakdown point, which is like right here. So that was a prior support. That is an area you'd think is resistance. So until it breaks back, plus Bitcoin does not look as strong as Mara. Mara looks a lot stronger than Bitcoin. But it can be like that sometimes though. But some good, good movement across risk on stuff. I'm looking about here. Most of it's green except Coinbase and Block. Risk on's having a good day. How's oil doing? ExxonMobil's looking pretty good. Oil's up a little bit, not back to the highs of a couple weeks ago yet, but it's looking good. It looks like just put a so now here's the thing. I was skeptical of the first move on oil, but now if oil gets back up through here, like this looks a lot better, in my view, for upside because you had a nice pullback and a breathing period. Now you're breaking that and you're going up. So I like that look. I like that look a lot actually. If we can get up, well, next really big spot will be here, up towards like 88 to 89, 88 to 90 on crude oil. Silver, another one. I got a covered call on AGQ. Still got 2 weeks on these at least, so a little more than 2 weeks. I have the 33 strike, which is this blue line. So, well, I don't want it to move that fast in a perfect world because if we do get a bigger breakout on silver, like I want to be there first for that. So it'd be cool. But if we get 33 by the 15th, it is what it is. If would be still a big move to go after what we've already seen on silver. What's gold looking like? Gold looks, it's come back, but silver looks a lot better, I think, than gold. Yeah. Silver's a lot closer to highs than gold. Yeah. It's like silver could be at highs in like 2 days based off of how volatile it can be. Gold would need more time than that to be at highs of the year. Like, it's got a while to go. But yeah, tomorrow I'm curious what this comes out. Not that I'm going to be like doing anything, but I'm curious what this number comes in at in terms of sentiment survey data. 32 was bears outnumbered, and then quickly, well, we had bulls outnumbering for a while, then bears quickly came back. This also is interesting too. The exposure index. We're going to get a new update here, though. The latest update was the 23rd, so it's the 30th. We should get a new update there soon. But that's kind of, this chart's nuts. Like, look at how just like people are locking it in and getting the hell out for now. Choppy, not sure, in the fall, you know, in the August and September volatility kind of play around, and then maybe getting ready to start positioning for the Q4 rally, maybe. I don't know. That's maybe people think is going to happen if they are trying to think, you know, and time the market. Maybe that's what people are thinking about. But I mean, unless, jeez, man, I'm freaking, this week has just gotten me. Yeah, I spent way too long earlier trying to set up a freaking camera system, and then only to realize that it was not working, and that I have to like completely change something, and like I spent like 2 hours just for nothing, and my mind is like shot watching a million tutorial videos trying to figure it out, and then it's like, oh, I don't have this piece, or oh, this thing doesn't work properly. Oh, great, like that's cool, that's why it wasn't working. Great. Fears. I don't know how much the election fears are going to be. What I will say though is that it's not gonna be, I don't know, I haven't looked deep into the candidate field, but I'm not super excited about the candidates, that's for sure. Because like, what's the reality is, like, I don't know if the reality is, I have no idea what's going on with Trump and stuff. I have no clue. Like, I don't follow that stuff at all. But the reality, it seems like if he's running, like, he's gonna probably have a decent, like, I mean, I don't know. Maybe someone can overtake him, and that will be for the better, I think, on the Republican side. Just because whether you like the guy or not, that aside, like, you're going to have the country was already, you know, ripped apart after him. I think it still is, like, but you kind of have, I don't want to say normalcy. You kind of have like people calming down a little bit about that stuff. He comes back, you're right back into that shit where everyone hates each other again. If you're this or that, then everyone looks at you differently. Not they still do, but you know what I mean? It's like, oh my God, we don't need that. I don't want that. I don't think anyone else wants it, but it is what it is. And then you have apparently Biden's running. Sorry, but the guy is going to die soon. He's old. He shouldn't be running for president. The guy should not be, like, I'm sorry. So how does that even make any sense? And is he the number one candidate on that side? I have no idea who else is coming up on the Democratic side. So it's like, that's terrible. That's terrible. Like, it's not a good situation at all. I don't like it. I don't like it at all. Can we have someone who's like 45 come out here and like actually, you know? No, they're all like 70 plus. It sucks. No one wants a 70-plus-year-old who also doesn't have any touch with reality of what's going on right now to run the country. You know, no one does. But it is what it is. So that said, I don't know. You know, everyone gets all up into like, well, Republicans are better for the economy, and then Democrats are not. But you know, you go back last election, and you couldn't really correlate that to price action necessarily. It wasn't that easy to correlate to. So I don't know. SEC is probably going to delay the Bitcoin ETF. I wouldn't be surprised at all. That seems like, I'd feel like that's almost likely of a situation. But yeah, getting into that, I mean, that's next. It's like a year out though. We're like a year out from the elections, really. Like a year from now, it's like it's heating up big time. So a lot of time, a lot can change, I guess. But yeah, I mean, we need someone to. Honestly, I think anyone sub 60 years old. Like, can we get some people who are sub 60 who have a shot? You know, that we can stand behind, but I don't know if we're going to be able to do that and whatever. It's all fucking. Now, don't want to get into all the rigged. I'm sure. I mean, let's be honest, right? Do you think that it's like, do you really think that everyone's vote actually counts? Like, I don't think so. But there's no way to know for sure. It's whoever has money can control it. Whoever wants to control it is going to be in control. So it doesn't matter at the end of the day, to some degree. But that's why, I mean, there's like these guys who come in who are young, who have good ideas, but they never see the light of day because, you know, there's higher powers at play here. But I'm not a politics guy. It is important stuff, but I, you know, number one, I hate it. Number two, like, I think it's completely out of our control anyway. It doesn't matter. So, you got to move. That's probably the best way to play it is you got to move. Move somewhere where, you know, you like it better than this. But, and it gets into a whole other gear. So yeah, there's positives and negatives. I think for sure, though, at a minimum, the U.S. as like the best country in the world, like that, I think a lot of people in the U.S. like will completely agree with the statement that it is not the best country in the world. Like there are totally better places in this country. It's not bad. There's a lot of opportunity, sure, but it's definitely not the best country in the world. Like that, you know. How was your trading day today? Today was good. I was up. I made like $100. Yeah, I'll have the trade recap. I'll be up in a couple hours after we're right, probably like shortly after the stream. I'll post the trade recap, and then I'll have an August trade review. I'm read for the month of August, but not by much. And then, which is, I think it's fine. I'm okay with that because there were some growing pains early. The first like week and a half, I just kind of dug myself into like not a massive hole, but like a hole that was too big to conceivably come out of without like doing dumb shit. So I started sizing up differently. I had to kind of, there were some growing pains with the sizing and like how I was going to go about the sizing. Now I got that under control. Now I know the contracts I'm picking. Now I know the setups I known that, but like now I know really to dial that in better. Like, so I kind of got everything kind of figured out, if that makes sense. I think. So, September should be good. And also plus August was a pretty, I mean, there's a lot of setups for me that just straight up did not work. Like, did not work. Great. Everything lined up good. And then it just didn't go. Just didn't work. Which is, you know, it's fine. Maybe that's the August effect. As we have more data, we're going to have a lot more to play off of and know. And then also, like, there's day of the week, there's time, there's stock, like, there's all different things. So there's a lot to unpack in that next video, the August trade recap video. But yeah, today was good. I played SPY, lost on that one, and played NVIDIA, won on that one pretty nicely, and then had a break even on Apple. So NVIDIA's been fun. NVIDIA has been fun, that's for sure, but captured some of the move to the highs here late morning. How's Google looking? Google looks pretty good. Daily on Google. Yeah, look at that. Google looks like it's ready for its next leg up. Maybe 140s coming soon. What does the weekly say here? Yeah, I mean, next spot I would say is low 140s. Up into here. Yeah. On Google. It's going to be big. It's still got a ways to go, but that's what I'll be looking at next. 5 minutes till close. Yeah, so I was trying to get my camera because I have like a, Canon M50 that I bought many years ago. Well, not many years ago, a couple years ago, I guess. And I'm trying to see if I can stream through that instead of using my like this webcam from my computer. Which is fine, but like the quality is not as good and stuff. So I'm like, I got this camera that I'm just sitting here. I might as well use it. But in trying to figure out how to get it to work, it has been the biggest headache. So I'm like almost at the point where I'm like, I'm done. I'm not. I got it to work today, but then the lag from what it was seeing out of the camera and what it was showing on the screen to the mic was so bad that I was like, okay, you can't even discern, like, well, you can hear what is being said, but it does not match the lips very well at all. So I was like, okay, I can't really have that. I don't think it's perfect this way, but it's better. It's much better than what that was going to be. So I'm like, okay, well, for now, we're just going to have to, leave that alone. Yeah, now it's options. The past like 6 months specifically, I've like the past 6 months I've dialed in a strategy that not only I think I can replicate for essentially forever and just adopt different stocks or just adopt slight adjustments to the strategy, but it's essentially a core of the 10 largest stocks with the best option spreads, best volume. That's it. Penny stocks was cool, but they're super seasonal and they're also like they're super highly manipulated. Like you get manipulation everywhere, right? Of course, but they're much more manipulated than large caps are, from what I have seen. And so it allows me to trade them. Well, allows the large caps. It allows me to trade them with a little bit more of a systematic approach versus penny stocks. I'd find myself like bending the rules way too much. Made a lot of money, lost a lot of money doing that. And so I think honestly I've lost more money in options because I was buying, next month calls on a friggin' dip buy that like you're asking for trouble when you're doing that, and then they'd go to zero. And so I've lost more money just like swing trading options, but I don't swing trade options really anymore at all. Now if I swing trade, it's shares. And if I play options for like a swing trade, it's like I'm selling something. I'm selling a covered call or whatever, or a credit spread or something like that actually plays off of the decay in the option versus getting railed by it on the other side. So that's what I do now. And we're building, by no means a professional at all, but we're definitely building a pretty decent strategy, I think, on the day trade side of things. And in the portfolio, then we got a portfolio that we're just building into and trying to grow and cash flow over time. And that's the Robinhood portfolio. So I've kind of figured it out of, what makes the most sense. And, it's a slow process of kind of getting there, I think. But I think we're at a good spot. Market can go up, could go down. I could give a shit less these days, really. Whereas in the past, oh my God, I wouldn't sleep. I would not sleep. I'd be in swings. I'd immediately wake up in the morning and check my, positions. Wake up in the middle of the night, check, futures. I would be like, it was bad. It was really bad, actually. And like, that was not mentally healthy at all. And that probably contributed, I think, to a lot of losses as well. Back, 2021, 2022. Those are some pretty unhealthy, I think, years or months to years, I guess. Penny stocks, so I'll dabble again in penny stocks with some swings, like at the end of the year. As we get towards October and November timeframe, I'll be looking. But yeah, I think I'm gonna kind of reserve that for like that time of year only. I don't think I'm gonna be swinging penny stocks any other time of the year, other than like end of year into like the first 2 months of the next year, and that's it. Of course, that could totally change. Like the market could totally change. Like that might not work. Not that works. It depends upon what you're looking at, but I think you've got higher probabilities, that's for sure, during those times, despite the market conditions, really. That's the higher probabilities. So COVID-19. Yeah, no, that was nuts. And it was good and bad. Like people did very, very well. Had I known what I know now about that time, like let's say a time like that comes, the way I view it is like, let's say I go on a 6-month run option trading and I just am like crushing it and it's like insane. I know that that's not going to last. Like you have that understanding now. It's like, that's not going to last, not reality. So in that period, I'm going to make sure that I'm locking away, either paying debts, if you have any, or locking that money or locking a decent chunk of that money away into just, dividend stocks or longer term holdings and just building out that cash flow. So at least, that money that you then made is going to get put to work versus you have the potential to lose it if the market changes, then you can't adapt fast enough, in a situation like that. But I think with sticking to day trading, it's a little bit simpler. Obviously, there's a lot of risk as well, but if you know what you're doing when it comes to managing risk and you have a strategy in place to manage the risk, it's just as dangerous as anything else, right? And it's just as safe as the next thing too, right? If you enter positions with a stop loss, well, and that's your risk. Right? If you move the stop loss, well, then that's you playing games, and now you're not respecting risk, and you're asking for trouble. Oh, 100%. Anyone can throw money in the market and win. That's how it was. That's legitimately how it was. Anyone could, and it got people frustrated. And the thing is, there were people who were losing because there were still people who in the small cap land and penny stock land who would be buying these things after they're up a couple 100% and then get caught in offerings. People still would lose, but yeah, you can throw money in it. There was a period. Now look at like AMC and stuff. Where's AMC at? Oh, I didn't know that they did a split. Did they have a split? Jeez. Oh wow. I didn't even know. Wow, this actually happened a couple of days ago. 1 for 10. 17 for 15 and a 1 for 10. What the fuck is that? I have no idea what the fuck's going on there. Either way, that's blasted. Look at this. This is actually insane. Oh my God. So after the split, AMC is now like legitimately at lows, like COVID lows. Like it literally tested COVID lows, like split adjusted price. That's insane. So if you want to look at AMC now, that's actually support, right? That's actually a spot where we could look for maybe a balance, technically speaking. But anybody now, there's not a single person who is a AMC whatever who could sit back and say that they are up on their position. No one can. 2 weeks ago, maybe you could have. Because, we're up here versus, if you maybe got in down here, no, not a soul could say that they are up since then. So it took its time and it's slowly unraveled, and here it is. But that's actually a funny one to look at too. That's a funny chart. Yeah. No, I remember those. That was like the if you're familiar with the Atlas Discord and stuff like that, like those guys who are now in jail. Well, not in jail, but they're now, potentially headed to jail. Like it's literally how it is. It's, it is what it is, but those are the days. I was in some of those and stuff. I was in one. I originally got in 2019 to penny stocks, and I was actually in a day trading Discord that had a swing trading side that I more so kind of gravitated towards, but they were day traders in there, and they were pretty much just trading momentum off of penny stocks. A lot of the same stuff that I trade now, just on large caps, but really just on penny stocks. I found that the patterns don't necessarily work as well on penny stocks compared to large caps, because there's a lot more chance for just an absolute fake out or manipulation or just a washout, or stop loss hunts are a lot more common. It's easy to manipulate those things. They move so much. So, it is what it is. That's how I got into it. And then, COVID kind of happened and everyone started getting into it more and more and more. And then I got into other Discords, and, you see how that's the progression goes. But yeah, I mean, I'm not really sure how you can look at this as like the AMC CEO, and how you can look at this chart now and have any sort of, think you're going to get any respect. Like you're, I'll say a piece of shit, but everyone who you just took advantage. I mean, because these people were, I don't want to say idiots that were in here holding this whole way down, but they're asking for it. So, I mean, honestly, at the end of the day, in management, it is what it is. The stock is what it is, but they kind of just got tossed into this crazy, retail manipulation kind of game, and then they took advantage of it, I think, and they made their money off that too. But that's funny. GME, what's GameStop doing these days? That's held up a lot better. That's not great, but Does not look great. I mean, here's another one of those stocks. Not saying that, like, you know, you got to short the shit out of this thing, but like under $15. $15. They haven't done any splits, or have they, right? Or no, they haven't. They did one. A 4-for-1 back in July of last year. Okay. But yeah, I mean, this is another one of those charts. Like, not that you want to short it because, like, you know, you can get bounced quickly, and the thing is, it can move a lot. But, you know, you break down below 1560 area. I mean, where are you potentially looking at next? I mean, you could be looking down. Stupid volume profile here. You just go back to number of rows. If I go to, I think I have it at 60. That's what I was setting at before. I don't understand how that thing works, but whatever. Either way, right? There's going to be room down here. I'll just say that. You know, maybe there's a little bit of something here at the 10 area, but under that, there's a lot of volume to fill through here, a lot of in here. So it's another one of those stocks. Now, it's not easy to just go short it, right? Because can you just go short this thing like randomly? Not randomly, but I don't know what brokers looking like and stuff. Let's go look at like Webull. And like, could you short it? And like, what does it cost? Oh shit. I gotta check in on that stock too. But GME, it is shortable. It is, yeah, it's shortable. Yeah, so you could short it. So yeah, I mean, and doesn't look like there's a fee or anything. So yeah, you just, yeah, it's not a terrible idea. Like, you could on pops, like you essentially know that the direction is like established and we are socked in and locked in. Of course, you got to have a stop loss in place. So manage that as you see fit. But on any pops back up substantially back into the 20s, like, it's almost like a no-brainer to short it, you know? This is your trend, and you could probably, you know, if you were to hold long term. Now, of course, you gotta have a stop loss in place, and that could be that's why AMC it popped and dropped. So you want to wait for a pop, but like, you know, maybe you get popped back up to this trend, and then, you know, you can get moves down, a big move back down. Either way, like this, I wouldn't want to long it. I would only want to short it, but again, even if you're going to short it, you have to have a stop loss because, you know, you could get screwed just like anything else. ICCT. What's that? Oh my goodness. That is a big move right there. That is a big move. That's a monster. Well, when these things go, right, one of the biggest things in small cap land, or just, you know, whatever, is it never dying. Like, you never let shorts out. That's one of the biggest things I learned from small caps is, like, when I watch them, you know, you have to watch for pullbacks. If you get like a big move up and then it comes down a lot, then it comes back up, you know, even if it goes to new high of the day, there is a chance for shorts to get out of the trade here or make some money, or at least, you know, reassess. If you get a move like this and then it just kind of consolidates and barely pulls back at all, like, you're not letting shorts out of this trade at all. And then that's why, you know, that's why like the bull flags are so cool, and same with the bear flags, because if we're going to get momentum, like, those are great, you know, trades back up or down on the other side, because shorts or longs never get let out of the trade, and now they're stuck, and then that can accelerate the move. So with that said, I'm going to wrap things up. I got a couple of things to do before I pack up and head out tomorrow morning, and I hope you guys have a great next couple of days. Great Labor Day weekend. I was about to say Memorial Day. Labor Day weekend. I will be at the Penn State season opener, and then I'll be back in town on Monday. So see you guys then. Hope you have a great rest of your day. Trade recap can be coming up soon, and then tomorrow I should have an August trade recap diving into all the details. So thanks so much, and I'll see you in the next one. Peace.